Hey everybody, welcome to Trading Capital's live stream of the S&P 500 sector analysis. So in today's live stream, we're going to be discussing all of the S&P 500 components, starting with materials, working our way through communications, energy, financials, industrials, XLK technology, staples, real estate, utilities, healthcare, and consumer discretionary. We'll also touch base on the Dow, transports, lumber, and copper. So there's going to be lots to discuss here as we progress through the stream. I'm just going to start off with the weekly and daily charts of all of the S&P 500 sectors, slowly go through each sector one at a time, looking for breakouts, failed patterns, bullish patterns, bearish patterns, anything that can give us some signals into making money in this market and where we see capital rotation trends forming and establishing. We're also going to move into the later session where we take Q&As. People will put in tickers. I'll look at some individual stocks and we will progress from there just to see how things will likely shape up into the next week's trading session. So overall, just keep in mind that next week we do have CPI on Tuesday. Wednesday we have some, I think it's a 10-year note auction. Then Thursday we have the PPI and retail sales, as well as some initial jobless claims. So there's certainly some market moving data on really the Tuesday and Thursday of next week. So traders, definitely mark that data on your calendar. All right, jumping into the SPY here. First things first. Welcome, Ram. Thank you. Hello. Good evening. Good evening. Good evening to everybody else. All right, so first things first. Monthly chart of the S&P. We're into this long-term upsloping trend line, hitting your pivot high in 2000, hitting your 2021 pivot high, and now we're trading into that vicinity as we speak. You can clearly see on the weekly chart. This week ended slightly negative, down 0.22% on the S&P 500, ending with a little bit of a distribution doji, which tells us that market participants are unsure whether or not we're going up or we're going down. So whenever you start becoming unsure at a resistance point, typically that puts a negative bias on price action and likely means that, okay, if we're not going to go through this area with conviction, let's take a step back, let's consolidate, let's sell and shake out the weak hands, and let's try another attempt later on. So as of now, we're at a 24-year resistance trend line, and that did get held in check on the weekly chart, even though you did get a little bit of a daily chart attempt at a breakout. So interesting price action as we head into the new week, but just keep that 24-year S&P 500 trend line on watch. All right, let's move along to copper and lumber, and then we'll start with the actual S&P 500 sector. So just looking at the copper futures chart here, HG1. I remember not too long ago, my members were actually short copper, but copper stocks have seemed to catch a little bit of a bid and almost look like they're trying to move up. So first things first, copper has broken a little bit of a downtrend here, as seen by trading underneath this parallel channel, your pivot low, pivot low, pivot low, all this consolidation, pivot lows, rejection here, sell off, bounce. If you can get back above that, copper can start a potential new bull market. But if you trade below this trend line, copper can actually break down. The positive for copper is that you did get a bounce off this previous breakout trend line. So right now, copper is still kind of in a no man's land. Maybe you're putting in a little bit of a W pattern here to potentially move higher. But at this point, you really haven't got a convicted move above this upsloping resistance channel. So as of now, copper, in my opinion, is still putting in potentially lower high, lower high, lower high, lower high, lower high, lower high. You have not really put in that higher high, although you're potentially putting in some lower low. So really just forming a bit of a wedge pattern. Obviously, copper is going to be very dependent on what the overall economy does, since it's the largest base metal in the world. We're required from EVs to industrials to planes to trains, everything that we know copper is pretty much involved in. So I'm paying close attention to how that reacts in the coming sessions, especially when we did get a little bit of a spike up in the unemployment rate. Typically, the economy starts to weaken after unemployment starts to uptick. So we'll watch copper very closely. Let's take a look at LUMBER, so lumber cash. Actually, we'll look at the lumber capital. Actually, we'll change it to the lumber cash one. So lumber has just basically been putting in a little bit of a consolidation pattern, trying to actually make a move up. First things first, you're going to notice this parallel channel. Looks like lumber wants to move up to this channel, which actually kind of aligns with the strength that we've been seeing in the real estate sector, which we'll touch base on in the later stream. But lumber definitely looking like it wants to push up, and maybe we still see some continued strength in the real estate sector if lumber's starting to push up. Obviously, if the prices of lumber pushes up, that is kind of signifying a little bit more of an increased demand in the real estate market, house building. So watching the permits, watching the building permit numbers, and so on and so forth. All right, let's move along to the first sector, which is going to be materials. So XLB. Inverse head and shoulders on copper. Let's take a look. I'll look at copper again. I do see that. I see what you're saying, but I'll tell you why I don't like it. I do see that inverse head and shoulders. Let's just pull that copper chart up. But I'll tell you why I don't like it there. Sorry, what's your name there? MW Moench. So you're probably looking at this. Let me just erase this arrow since it's going to be in the way. But you're probably looking at this inverted head and shoulders pattern like this, right? Am I correct? So one of the reasons why you can't actually have that as an inverse head and shoulders is because this left shoulder is almost pretty much in line with your bottom. You know, typically your left shoulder should be higher than your bottom, and it's pretty much in line with it. So it's more of a double bottom pattern, which still holds some strength. I just don't like it as an inverse head and shoulders because I don't like the fact that this left pivot is almost as low as these pivots. So that's what I don't like. Now, I mean, of course, if you're using closing pivots, sure, then you do have a well-established inverse head and shoulders. So this is where, you know, it kind of technical analysis meets between that art and science aspect, because it's really, what do you see? You know, how are you using it? Is it the close? Is it the wick? Typically, I use the wicks, but if you're using the close, then yeah, sure, you can actually have that pattern. If I remove that trend line, I just remove this upsloping trend line, then your pattern, your neckline would probably be around this area here. So you haven't broken it, but it is trying to really test that upper range. And if you were to break that area, you know, you're looking at about another 10 to 13% move up in copper. And then you look at some of the copper stocks like FCX, Freeport-McMoRan. You know, I think that has tried to make a little bit of a bullish, almost W pattern here, trying to break out simultaneously, but still just stuck under this resistance neckline here. You know, this neckline is pulled all the way from this head and shoulders on the daily that triggered. So here you have your left shoulder, your head, your right shoulder, big breakdown, gap above it, reject and close back below. Now you're trying to get back above that. So, I mean, the pattern is developing potentially here to break out on some of these copper stocks, but it's kind of just at resistance at this point. And if you do break out on FCX, yeah, 67.30 is a nice upside target. I think you could potentially formulate this case that even on FCX chart, you do have this larger weekly pattern, left shoulder, head. Now you're forming this rather large weekly right shoulder. So there is some validity that copper could actually break out. But it's really going to be dependent on what the economy does, since it is. All right, let's move along to materials, XLB. So XLB has been one of the strongest sectors. You know, just continuously grinding week after week after week. We've been watching this sector closely because we've seen that technical breakout happen basically at the midpoint of February, and then you got your confirmed candle end of February. Now you've just charged higher and higher. So this one has formed an inverse head and shoulders breakout pattern, clear as day. Now upside target is 108.72, but it doesn't mean you just go full port calls, long, because this is still extended, you know, and we could be seeing a little bit of a distributive phase in the market, but definitely a strong pattern in XLB. And this might also help support the thesis that copper could be moving higher. So materials being strong could also support it. We're waiting for nat gas videos like the day before Christmas. Thanks, Arvid. I'll touch base on nat gas. But I'm not going to tell you when in this video, but I'll touch base on nat gas in this video. My members already got my analysis, but I'll put out a nat gas video within the stream. But looking at materials, yeah, clear breakout. And again, upside But what I would look for on this sector or in this sector is retesting some support. Again, 1, 2, 3, 4, 5 weeks consecutive. I would like to see a retest and then higher price and then a back test and then the stair step pattern up. Whether or not you get it, time will tell. But I personally, from a risk to reward, would rather see a check back to support to buy the material sector, but definitely a strong material sector chart. In terms of XLB, on the year-to-date performance, so materials, let me just find here, materials are actually up 4.45% on the year, actually underperforming the S&P 500. The S&P 500 is up 7.42% year-to-date. Materials are only up 4.45%, which actually suggests that, okay, maybe this sector can still push higher to narrow that distance since this is a bullish chart breakout. Obviously, you're coming up into these two massive weekly reversal candles, so you can see that there is resistance in this wide range red bar here as well as here, so you haven't truly broken out of these all-time high pivots like the major indices have. So just recognize, even though this is a bullish break, you're still trading under your all-time high pivot. So it is a little bit of relative weakness in comparison to the major indices. All right, let's move along to XLC. So XLC is communications. It's been a monster sector. Communications have, in terms of its year-to-date performance, it's up 10.62%. 1 year performance is 53.9. The S&P 500 is only up 7.42, so communications are actually outperforming the S&P by about 3.2%. Massive move in XLC. Again, XLC isn't above its previous all-time high pivot. Meta stock. Like, wow. Massive move to the upside. You are into resistance on Meta. I'm more inclined to short here, and I do think that Meta likely will see a pullback in the next 3 to 6 months back down to 385. I think Meta's just had a whopping move, massive move on the back of funds being liquidated, oversold, underpositioned off of this huge sell-off. And now you've just had a monster mean reversion event that has kind of gone a little bit parabolic and insane in my opinion. Even if you look at Google is way underperforming Meta, hitting that double top and selling off pretty ferociously. So even with XLC outperforming the S&P, you have Google actually selling off in the last few weeks, and it really hasn't materially impacted the XLC ETF, which just shows you how skewed the XLC is in favor of Meta. I still think communications can pull back to the low end of this channel. Right now, you're putting in a weekly bull flag. That consolidation is actually looking very nice to move higher, but you're still at resistance, and I could easily see a check back down to the low end of this upsloping channel. It's a moving target, so just keep that channel on watch for communication stocks. All right, let's move along to the next sector, which is XLE Energy. Energy has been one of those sectors that have pretty much underperformed the market at every turning point, every step. Energy year-to-date performance is up 4.44%. Energy is actually, I'm very bullish on energy in the near term because of the fact of this little bit of a breakout. And I see oil actually pushing up to $84 and then potentially even 90, but we have to wait for more data. But look at this quiet breakout on XLE. Really, since you hit this upsloping support channel, your parallel channel, it's just been upside since, and you've just been grinding week after week after week. Even though oil's been stuck in that $77, $75 range, energy stocks are still showing life and pushing higher. I still see upside at least to this $92, $93 area. How I get that resistance is this trend line pivot to pivot, but you're just creating this rather large wedge pattern. And considering you have been consolidating in this choppy range for really since this pivot high, this Ukraine-Russia war pivot high, sell-off, pivot high, sell-off, since this 2022 pivot, you've been really consolidating a wide range. It makes me think that, okay, if you do break out to the upside, you could have a power move to $100 on the chart. You could easily have a power move to $100 and then even potentially testing this double top at around 101.50. So keep your eye on XLE because it can have a potential parabolic breakout here in the coming weeks. And you could really get a big squeeze to the upside, especially if you factor in that, XLE is predominantly centered around oil. And you really haven't had any sort of performance in nat gas. So what happens if nat gas starts to perform and also puts upward pressure simultaneously while oil is putting upward pressure? Then you have a recipe for this XLE to really hit 92, 93 and push to that 100 boundary mark. All right, let's quickly take a look at XLF, another sector that has been a massive, massive performer. Financials, in terms of its year-to-date performance, are outperforming the S&P just slightly. S&P is up 7.42, financials up 7.6 on the year-to-date performance. But again, look at this parabolic move in financials here. A massive move. 1, 2, 3, 4, 5, 6, 7, 8 or 9 consecutive green candles in a row. You're now hitting this trend line. This trend line connects this COVID washout pivot, your big bounce support level in June, your little bit of a technical weekly breakdown, recapture, bounce off that support, retest resistance, huge impulse weekly red candle breakdown bar. This is a big breakdown zone in the trend. You managed to come up, retest it, and now you're retesting that trend line again. Almost at double top. This makes me think that you could actually grind higher on this trend line until you get a bigger move down. I could still see a corrective phase of roughly 9-10% coming, just like we saw over here. You're getting very, very extended both on the weekly and the daily RSI. Look at this weekly RSI. Look at when you were up here. Weekly RSI ended up yielding roughly a 9% correction on that big dip. Then you push to a little bit of new highs, which I think is what could happen. I think we could actually dip back down in the overall trend, push all the way back up to this high, and then have a bigger corrective phase down, just based off of how previous cycles and patterns have played out in the financials. But again, financials have really been grinding higher because interest rates have been moving lower. You really haven't had any sort of events that have spiked rates other than that last CPI. But even then, since that CPI, rates have sold off, which is why you've seen markets grind higher, which is why you've seen financials grind higher. But what's interesting is you've had yields falling, so rates have been falling drastically, but then you're starting to see weakness and severe underperformance in, say, the likes of regional banks, KRE. Obviously, we're all aware that NYCB had massive volatility last week, almost completely collapsing and going under, getting a very bearish close, making new 52-week lows, and I don't know if that's new all-time lows, but not a healthy looking chart on New York Community Bank, actually well below your .com crash pivot, not your all-time lows, but well below your .com crash, which is saying something. Whenever you start seeing these regional banks move like this, you have to wonder a couple things. A, is the Fed going to step in and just pump new liquidity in? Or B, is this going to be another kind of deflationary, disinflationary banking crisis that causes people to lose money in? Time will tell, but as of now, NYCB did secure several billion in funding to keep their shop up and going. So short-term positive for the regionals at this point in time, but definitely not a healthy looking chart and likely will go lower if it continues to see some of these downside pressure moves that it has been seeing. So financials, the mega cap or the big cap financials are strong. Regionals are still seeing a little bit of weakness and potential fear creeping into the picture here. All right, we're going to quickly go through next sector is industrials, XLI. So likes of Boeing, 3M, many other stocks in there. So industrials, again, have had a beautiful, beautiful run. Another super performing sector. Again, we had an upside target on industrials around 125. I've had that for a few weeks now. And look at this move. 1, 2, 3, 4, 5, 6, 7, 8 weeks of consecutive upside. You had a really, really small pullback there off of this 110 zone, and then you had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of upside. Massive, massive moves to the upside in these names. I'm just going to adjust this channel to see if this gives us a little bit more of an accurate upside move. And you can see it's even blasted through some of these resistance channels that we've had on the charts for quite a long time. So it just shows you how strong and parabolic a move the markets have actually undertaken in the last several weeks. Massive moves up in the indices and individual sectors. Could this sector still move up? Yep, I still have an upside target of 125, but I wouldn't recommend chasing it up here. I mean, if you're looking for a move to 125 as an upside target, and really you're buying here at 122.3, who's to say we can't retest 110 before we go up there? Or who's to say we just get up there and then have a big sell-off. The risk to reward doesn't favor going long anymore in these sectors, despite it still being in a very healthy, strong uptrend. It's just severely overbought. Weekly RSI entering those overbought time frames that typically see big intraday swings. You saw a big intraday swing here, a decline in a couple weeks, from that 80 all the way down to about 70 on the chart, 70, low 70s. Another move over here where you ended up seeing a high push and then a big decline. So a big decline is likely due in some of these individual names, just like we saw in the semiconductors and tech-based environment on Friday. So definitely don't chase industrials, even though it is looking like a very strong sector. XLK is interesting. XLK has been one of the monster performers. Obviously, XLK continues to outperform pretty much everything on a year-over-year basis. In terms of its year-to-date performance, it is the best performing sector, up 11.1% as opposed to the S&P's up 7.42%. First things first, couple parallel channels that we're watching. So this parallel channel basically connects this pivot low to this pivot high to this pivot low, and now you're into this pivot high scenario. Notice how we've been chopping really for 1, 2, 3, 4, 5 weeks at the high of this channel, and it seems to be that we're slowly starting to get rejected off of this area. So I'm watching it extremely closely, very closely. The important thing about XLK is it actually did make a big move all the way above this key monthly trend line breakout. So notice that XLK had a breakout on the monthly chart above this long-term trend line, which goes all the way back to 2000. I'm expecting a retrace back down to that monthly chart support, call it 189.20 on the charts. I think that's where XLK is likely going to retest, which would still indicate a pretty big fall. And remember, this sector is actually dominated by really two companies. Microsoft's the heaviest, and then Apple. So just understand that there could potentially still be another 9% move down in the XLK sector. If you actually look at XLK as a whole, I'm actually just going to pull this XLK chart on my other screen, and I'm going to change the screen viewing here so you can see the actual XLK weighting. So just give me 1 second here. I am going to change screens, guys. I am changing screens. Just bear with me. There we go. So I'm just showing you the XLK ETF here and some of the individual names in this particular holdings and how it's weighted. So there's roughly 64 holdings in the XLK that make up this ETF, which is what we're looking at. And when we analyze the price action, obviously they have it sorted from the best performing. So NVIDIA, you can see it has a 7.46% weighting, and it's up 76.77% year to date. This is a year to date move. So since the start of January, up 76.77%, a monster gain. And then when you actually go through, so obviously you can see some of the outperformers, AMD, AMAT, a lot of the semiconductor names leading the charge. Then when you go to the bottom of the list, all the way to the very end, take a look where Apple's sitting. Apple's the second worst performing stock in this XLK, which has an 18% weighting in this ETF. Intel, only a 1.8% weighting, but also underperforming drastically. Adobe, ANSS, some quality household names are underperforming. First Solar, VeriSign, ON Semiconductor, Skyworks, PanW, a Nancy Pelosi holding. So some severe underperformance. And it begs the question, what happens if a name like Microsoft, which has a 22.5% weighting in this index, the heaviest stock, starts to lose these year-to-date gains? What if we go through a corrective phase where it goes back down to, say, 0% year-to-date? How deep will it push this XLK? So basically, we've priced in about roughly a 9% decline in XLK from current levels down, which this is the most important sector of the market because it's the heaviest weighted, the most concentrated, and has the biggest amount of market cap and moving events that could transpire in the market. But we have a 9% downside move priced in. So it really would take Microsoft losing its year-to-date gains and then, say, NVIDIA basically losing a fair-sized chunk for this ETF to actually fulfill our downside target. So keep that level on watch. There's a very likely scenario we could retest this 188, 190 zone on XLK. But it's just interesting to see how this market is so concentrated in such a few names in the overall grand scheme of things. And certainly the names like Nvidia, Microsoft have done exceptionally well, but we really need to start paying close attention to them, because again, if they start breaking down, that's when you could have a great deal of weakness in the markets. I see there's a few questions on the TradingView side here. Let me just quickly read them. Stocks 1969, the Fed pumping new liquidity. What do you mean by that? Well, we saw them with their funding program, right? Where they ended up opening up the discount window to regionals. That's a form of liquidity that came in. And you also had them announce that they wanted banks to be forced to take on an additional year. So whenever you have liquidity, whether they name it some fancy name or some stupid name, liquidity is liquidity, right? If you're bringing in new liquidity that wasn't there, that's inflationary. That typically helps asset classes go up. So, I mean, it's almost like, although they have been cutting from their balance sheet, which historically, if you follow the balance sheet, the balance sheet trends, the S&P does exceptionally well when the balance sheet is increasing and does fairly poorly when the balance sheet is decreasing. Well, you had that trend, that correlation that a lot of people have been watching absolutely get broken, shattered. Balance sheet has been dwindling pretty sharply, on a consistent basis by the Fed, but the S&P has just been grinding higher and higher and higher. The two's completely diverging, balance sheet going down, S&P going up. That's not a historical norm. So what that tells us is that, okay, new money is entering the system in other ways that the general public is just not really paying attention to. It's easy to follow a balance sheet update, but it's difficult to follow how many banks are truly tapping the discount window. Did one bank tap it for $1 billion? Did another tap it for $10 billion? Net liquidity, was it an increase in liquidity on that week, or was it a decrease? So it's a lot harder to track the discount window funding terms and programs when we're not really privy to all of the information. So all I'm saying is, although there's still contracting liquidity happening on the balance sheet front, there's also expansionary liquidity still occurring underneath the hood of this market, which is why we've seen such a huge run up in the overall indices. And it's kind of what also happened in 2008, where the Bear Stearns and whatnot collapse. You did have Bear Stearns go under, and then the market actually managed to have a huge rally for about 3 to 6 months, and then ended up having a collapse. Now we're going through something like that. I don't want to be so doom and gloom. Don't want to say anything like 2008, but you never know, right? Just never know. Just reading through a couple other comments here. Yeah, honestly, stocks 1969. Can someone verify that if the BTFP ends tomorrow? I've heard a lot of things that it does end. I've heard that it doesn't end, and honestly, I don't know I don't even have a comment on that. When I'm unsure, I just look to what the regionals are doing. I look to what the financials are doing. Regionals had a strong day on Friday, but still a kind of a weak and rough, choppy week. But I don't know. It could certainly be ending tomorrow. You are seeing an accumulation in the VIX. You're seeing gold ripping. So there's certain signs in the market that are showing that maybe it is ending tomorrow. Hey, Miss M.W. Moench. I'd have to explain some of the recent weakness in the region. Okay. All right, let's quickly keep moving along here, guys, and then we can go into some of the Q&A after. So we've looked at XLK. We've looked at, next is Staples. XLP was in rough water. So XLP has been a monster performing sector, and I still have upside bias in this sector, and I'm actually long some consumer staples stocks with members, two in particular, which I'm going to keep close to my chest. But XLP weekly chart, overall XLP had a little bit of a pullback on Friday on the back of Costco earnings. So Costco actually had a big down candle, gapping down on its earnings report, having some pretty harsh selling. And it's granted, it's had a huge parabolic run. So I think that some of the rotation out of some of these overbought staples names are going to find some rotation into some of the more oversold names, which is what I think we're going to see. But Staples right now is trying to get a breakout out of this downsloping trend line. You can see we pierced above it on the daily, and got slightly rejected with a sell-off, but still closing the week higher in comparison to its few previous weeks. Although we're at resistance, I think if we put in a sideways pattern, XLP is going to try to make a move up to the $76 area and then potentially even $77.80 in the near term. So give it a couple more weeks. I think as long as we just stay in this channel, XLP is likely going to push higher again. There are some individual names that I'm bullish, but when you look at some names like COST, Costco, got absolutely crushed, ending the week with a huge weekly engulfing candle. That's something you want to pay attention to. Typically, Costco is one of those Wall Street favorite stocks. If you get a retrace, I do think it's a short opportunity, but that's not a good sign for the names like Costco. If we actually just look through the staples sector for the year, XLP's year-to-date performance is only up 4.44%, so underperforming the S&P as a whole. I just want to scroll through some of the staples performing. So if I actually readjust the chart and go through some of these staples names, just bear with me, I am changing the chart. So if we look at the consumer staples, there's really 38 stocks that influence the XLP names here. And basically we can see the best performing, like Kroger, Target, Dollar General, Walmart, Colgate, Cisco, Church & Dwight, Costco, again up 9.9. So all these stocks are outperforming S&P 500. And you can see that the weighting of Costco is a huge weighting, 12.5%. Then you have Procter, 14% weighting. Clorox, another one outperforming the S&P 500. Hershey, Dollar Tree, Altria, Coca-Cola, and then you have some of the underperformers. Mondelez, PM, Pepsi, Brown & Brown, Lamb Weston, Walgreens. They're actually being removed from the S&P. So clearly there are some stocks that are a little bit more overbought in the consumer staples sector, and you could see some capital rotating into some of these names that have not seen some of the outperformance, like the names of KR, Target, DG. Names that I do like, specifically speaking, Procter and Clorox. I do like those names in the staple sectors for potentially longs. All right, I'm going to flip back the screen to see the chart here, so just bear with me. I do see some guys approaching, so MW Moench putting in a link here in TradingView. Let me just open it up. So the Federal Reserve discount window, so bank term funding program. What's new on January 24th? Thank you for putting this link in, by the way, Moench. So let's just put on this chart here. We'll quickly read through what this bank term funding program is so that everyone can see it. And let me just actually make my screen a little bit smaller so you all can see the full size picture. So what's new? On January 24th, the Federal Reserve announced the Bank Term Funding Program, BTFP, will cease making new loans as scheduled on March 11th. In addition, effective January 25th, the interest rate applicable to the new BTFP loans has been adjusted such that the rate on the new loans extended from now through the program expiration will be no lower than the interest rate on the reserve balances in effect on the day. So it is looking likely. Okay, so yeah, tomorrow the BTFP loans should be ceased. So watch regionals, watch the VIX, watch gold. Maybe gold has been front running this expiration of the BTFP. Gold has certainly seen a massive parabolic move to the upside. So maybe that's why we're starting to see some fear creep into the market. The Federal Reserve Board on March 12, 2023 announced the creation of the new Bank Term Funding Program. The BTFP offers loans up to 1 year in length. We all know that. Yada, yada, yada. Yada, yada, yada. Okay, so guys, again, thank you for putting that in. It is pretty clear that the BTFP is coming to an end. So that's certainly going to be market moving for, I think, the regionals and the financials. Watch it closely. We did see strength in the market after that BTFP was created. So watch that very closely. Thanks for putting that link in there, MW Moench. Much appreciated. Much appreciated. All right, let's quickly move along to the next sector, which is going to be real estate, XLRE. So remember how we said lumber's looking strong and likely to move up? We'll take a look at this XLRE chart, looking like a nice weekly bull flag trying to break out. That kind of also supports the thesis of lumber moving higher. Not only do you have a weekly bull flag that's trying to break structure, you have this downsloping trend line, pivot to pivot to pivot, that you're trying to get above of. So you can see that you broke out here last week and now you confirmed the breakout. So this chart is looking a little bit more likely to move higher. I mean, you are still putting in a big downtrend. You are still putting in lower highs on the chart, but this could be your first real higher low pivot that pushes you up and really starts to test this pre-COVID high sell-off around $42 on the chart. So I'm watching real estate closely because A, you have a little bit of an interim bullish pattern, but B, you also have potentially a much larger bearish pattern that could be developing. So you could have a left shoulder, you could have a head, you could have a right shoulder forming that if you break this little upsloping neckline, I mean, it's all over for real estate, you're going to have a massive disinflationary move to the downside. So real estate's certainly looking interesting, but again, I do think that upside is favored, just especially due with how lumber price has also been moving as of late. And if interest rates still continue to fall, it will put in the short term, I believe, an underlying bid in the market because, again, people think, hey, rates are falling, let's go buy a house or let's go sell a house. It kind of helps the market on both ends of the curve. All right, let's move along to utilities, XLU. So again, utilities are typically underperforming the market as a whole. In terms of utilities year-to-date performance, it's actually negative, down by 0.16%. So not a healthy sign for utilities, still in a massive downtrend despite the markets putting in new all-time highs. So what typically happens is, if utilities have been underperforming and are actually still negative on the year, can we see utilities start to firm up here and break this downtrend, especially if the S&P starts to fall? So I'm looking at this sector, and as of that monster strength weekly candle last week, and I'm seeing that this sector could be breaking out. I'm seeing that typically utilities will start to outperform right before a little bit of a market correction or sell-off. And what I'm seeing here is a massive surge, a weekly surge candle, a strong week closing of 3.29%. when the markets actually had a terrible or a negative week. So could we be in the near-term precipice of seeing utilities break out? I certainly think on the risk to reward side, as a more defensive-based sector, longs are favored. I think that once we break out this little bit of a trend line, you could actually have a move up in utilities that puts us up to about 77, 76 on the chart, back to our previous high. So utilities usually outperform right before the S&P 500 starts to decline. And we get a bullish break of this pattern, it's going to be a nice potential trade on the utility front. So watch this sector for a bullish breakout. Again, this sector typically rallies right when there's going to be a time of market stress and a big rotation out of the more saturated tech space. So watch utilities on the bullish side. I am leaning more bullish on XLU and some individual names. All right, XLV, let's take a look at XLV. So healthcare is actually, in terms of its year-to-date performance, it's still underperforming the S&P just slightly. It's up 7.1%. So still yielding a positive return, but underperforming the S&P 500. Really nothing's changed on the healthcare front. You can see some of my old trend lines here just to dissect things. Healthcare broke out of this wedge. You're into this new all-time high pivot. I expect to retrace back down to the wedge and then pushing for new highs in the healthcare trend. As of now, just putting in weekly consolidation, still just a little bit extended and overbought, but bulls are firmly in control, being the fact that you've had now 1, 2, 3, 4, 5 weeks above this previous all-time high pivot. So 5 weeks above that previous all-time high pivot is telling us that, hey, this trend is likely going to hold, and we could see it just consolidate sideways in a tight range before it makes its next potential bull flag breakout. So positive price action in healthcare, definitely showing a resilient side in the overall market. So definitely a positive sector to continue to watch. Again, aggressive traders, I think, can buy this first 143, 42 level, but I think the more conservative approach, what I'm waiting for, is a retrace back to that original high end of the wedge pattern. And then if you simply lost that wedge pattern, you have an opportunity to move right back down to the lows. But as of now, it's looking structurally bullish to continue higher. Final sector, XLY. This sector is heavily dominated by Tesla and Amazon. So consumer discretionary. It's going to be interesting to see if this sector starts to break down a little bit more, especially on the back of the weaker unemployment number that we received. So obviously consensus was for 3.7% unemployment rate. It came in at 3.9. So definitely a definitive spike to the upside. One thing's for certain, XLY is looking like it's formed this inverted head and shoulders. You can see it's had a nice technical breakout. So beautiful technical breakout on XLY. Some can draw the shoulder here. Some can draw the shoulder here. You did get that golden cross on the weekly chart quite a long time ago. So when you throw on the 200 and you throw on the 50-day, which I'll just have to move this, you can see you got that golden cross quite a few weeks ago, and it's just been, price has been trending higher and higher since. So this does tell us that, okay, hey, the main trend is in bullish alignment and you're likely going to see further upside. The only headwind for the sector, and what's interesting is this sector's still, this ETF has been holding up spectacularly despite the weakness in Tesla. So when we look at XLY, XLY is definitely dominated by Amazon and Tesla. Amazon has a weighting of 26.29%. Tesla has a weighting of, let me just find it here, 12.5%. So Amazon's more than doubled the weighting in Tesla, which is why this index is holding up definitely a lot better than most are expecting. But the one thing that's concerning is that what if Amazon starts to break down? You know, look at Amazon. Amazon's extended, super extended. Amazon's actually achieving its upside patterns here on this inverse head and shoulders. And you're at some pretty heavy resistance. Look at Tesla, which is the second heaviest weighted stock in this particular sector. It's actually broken down. And you can see a bearish weekly cross is about to form here. So that's so interesting that Tesla's forming and on the near-term precipice of forming a bearish cross here of the 50 and the 200 on the weekly chart. But then when you look at XLY, it had that bullish cross. So this leads me to think that, oh my goodness, if Tesla starts to really break down more and there is a potential downside target of Tesla of around the low 140s, and then potentially even lower if this head and shoulders on the weekly chart plays out, you could see it move back down to 89 bucks, 87 bucks on the chart, which would be probably a gift of a buying opportunity. But it just shows you that Tesla's been so weak that sector's been still holding up. Tesla's chart is still looking weak. So if Amazon goes through more profit taking, and if Tesla goes through more profit taking, that's going to put a whole lot of strain on this XLY. And this XLY ETF could become a potential failed inverted head and shoulders. And you could actually retest all the way down to this mid 160 range on XLY. That would be a pretty big sell-off in the near term if that was to happen. So overall, there's a few sectors I'm leaning bullish on, a lot of sectors that we're leaning bearish on. I'm not going to give any definitive trade recommendations based off of this sector analysis yet. There's a lot of individual charts that kind of have a lot of bearish and bullish divergences. So it's important to understand how these ETFs are weighted and how sometimes they're skewed in such a favor of individual stocks. But definitely when you look at the broad sector analysis, there's certain sectors that are likely due for some consolidative corrective price action, and there's some sectors that are likely going to see more capital rotate into them, which should push it higher. So there's always going to be continuous bullish and bearish setups on both sides of the market. Even if the market falls, there will be stocks that go up. Even if the market rallies, there's going to be stocks that fall, which is why we try to do this sector analysis, because it allows us to almost catch pairs trades. It allows us to play both sides of the market and just allows us to see where capital is rotating to. Enough about my rants. Let's go through some questions. If anybody has any individual tickers that they're looking at, feel free to put them in the chat box and I'll be able to look at them. I know Arvid wanted to look at natural gas, so let's look at natural gas for all the natural gas bulls out there. I'm just going to turn off some of these key moving averages. I'm going to throw on the 7. So take a look at Nat Gas. Nat Gas, obviously, we all know has been under pressure. It's in a downtrend. It's getting severely slaughtered on the year. But what's important about Nat Gas is that over the last couple of weeks, it's been trying to put in a little bit of a local low and move higher ever since. The big level that I've been informing everyone on my stream is this 186.22 level, Arvid. What's important about that level is if you go to your weekly chart, it is a massive, massive volume gap over here. This is where price action broke out from 52-week lows and started making its new higher low uptrend. So that 186 target is a massive, massive supply zone. Currently, we are above it. You closed the week last week right on that level, and you're now gapping above that. Notice we're also gapping above the 7-week moving average, this yellow moving average, which is a bullish sign. As long as you stay above that, price action is going to push higher. A little bit of a bearish signal, though, is the fact that if you lose this 186 zone, you're going to go back down to gap fill and likely even double bottom, potentially even $1.50 on the Nat Gas chart. So watching this 186 level like a hawk, but I remain net more bullish on Nat Gas just because of how some of the underlying Nat Gas equities are actually trading. So right now, I think that you still can lean more bullish. If you want to trade Nat Gas, I like to use UNG, United States Natural Gas. Obviously, if we look at this chart, it's pretty fascinating to see this beautiful parallel channel that we've been chopping and trading into, and we're still at the lows of that key channel. So watching that closely. Very risky trading the levered ETFs like BOIL and KOLD, but definitely there are some times where those ETFs will come in very, very handy, especially on the day trade front. So I still remain more bullish on Nat Gas. Even if you look at some of the Nat Gas stocks, AR, Antero Resources, still holding up near the highs of the session. Look at that. Still continuing to grind, almost trying to break out of this massive wedge pattern, AR. So Nat Gas resource stocks showing incredible strength despite, the Nat Gas prices actually retraced a lot of the up move that it had. So continued strength in the resource stocks is a positive signal. It's showing that more speculative investment is flowing into some of the natural gas names, which typically supports higher commodity-based prices. EQT, another one, forming this beautiful bull flag. Looks like it's going to push higher with Nat Gas. Yeah, I do see that often, Michael. Nat Gas in general rallies when the indices sell off. I do see that often. Yep, that's a good observation. RAM, QQQ short trade, and swing semiconductor. QQ short trade and swing semiconductor swing trade. All right, so let's look at the SOX. So I did touch base on the SOX. I'll look at the SOX and the SMH. So look at that nasty bearish engulfing candle on the SOX. Huge, huge breakdown. You've engulfed not one, not two, but almost 3 candles in one session. Big, big top. Weekly distribution candle on volume. Price is likely not going higher than this 240 for probably quite some time. But I do see support at this 216, 217 area. First support. Second support really at this, again, 214, 215. And then you have your parallel channel, the low of the channel. Call it around 206. If you were to throw a fib retrace, so what's interesting, we're just going to take this low move, this low here, to your high move. You ended up seeing a pretty spectacular rally from this low to this high, which ended up with a correction that corrected you back into the 382. You actually just pierced that 382 fib zone. So if we take a fib retrace from this low to this high, we can roughly estimate that just according to previous cycles off of a natural correction, not assuming the economy weakens, not assuming unemployment, also just a natural historical price correction, just like we did off of this correction, you should retrace to the 382 fib, just a pierce of that level, which would put us filling this gap, which would put us below this channel into the 203, 200 level, so low 200 level, just if we see a natural correction. So that does imply that there's still more of a short trade to play out in semis. Just a simple correction from here is about another 10% down in the semiconductor chart, in the SOX. If you look at the SMH, Oops, sorry guys, you still have I changed the wrong screen. My apologies, my apologies. Let me start that analysis over, guys. Let me start that analysis. We're doing work on the wrong chart here. Thanks for letting me know, Michael. All right, so flipping back to the semis, let me erase this. So looking at the SOX chart, nasty bearish engulfing candle on volume, engulfing one but two sessions in one day. But if we look at the last bull move, from this low pivot here in October of 2022 to your high pivot here, if you draw a retrace from that low to the high, you can see that price went through a sell side corrective pressure for a couple months, and you hit really a low around this 382 fib zone. So price retraced roughly 38.2%. If we apply that same retrace, just a minimum retrace, using similar market structure, if you get a retrace to 382, that's puts you around that 203, 204 level. You fill the gap, you're just piercing this parallel channel. That's just a natural retrace without any overshoot, in terms of the market declining more on the back of higher unemployment, a weakening economy. That's just a simple structural pullback using the previous cycle that semis had. So that would indicate still roughly a move down from here to the 382 is roughly about just over 10% in the SOXX, just a natural move. So I think that's a very, very strong target to look for. I think if you're shorting, that's probably a good cover zone. And then if you decide to leave runners off that area, just protect the position if you're in the money. So I think we could definitely see semiconductors pull back to that zone. Even if you look at the SMH chart, which is actually a little bit more skewed, I don't like to trade the SMH as much because it's more heavily weighted in NVIDIA. So it doesn't give you a broader sense. It has a much, much higher degree of a weighting in this ETF than the SOX. So even if you look at the SMH pulling back to that 382, let's see where it would pull us back to. Roughly 199, 200 on the charts. Notice how the SMH is actually holding a little bit more relative strength. It would not fill the gap off of a 382 fib retrace, as opposed to the SOXX would fill its little technical gap. So just a little bit of relative strength in the SMH because it is a little bit heavier weighting in NVIDIA. So hopefully that helps. QQQ, let's look at the QQQ RAM. So QQQ chart, basically putting in another bearish engulfing candle. Notice the QQQ actually has run into a little bit of this measured move pattern that we've discussed with members. I think the target for the Qs is a retest of your previous all-time highs. I think that so many people have been shocked by the fact that the indices have pushed above all-time highs in such a quick succession that there's a lot of volume and liquidity that was just waiting here. I think that a retest on the Qs back to 408 is very, very likely. That'll also coincide with roughly the center point of your parallel channel. So I think that 408 is very, very likely. Again, if you do a similar market structure where you had this low to this high, this low to this high, pretty much an identical measured move, almost $104 up, $104 up, 128-day upside cycle, 128 upside cycle. So again, we apply that same sort of retrace from this low to that high, and you can see price pretty much almost just retraced, pierced the 382, almost hit the 50% retrace. So if we were to do that same sort of a market structure rally and pullback, basically if price recorrects between the 382 and the fib, that dips you past the previous all-time high, but just slightly below it. So just below, around, maybe even around 400, 401 whole number. So you're very close to that whole number around 400. You can see that it would be somewhere in between 408 and 396 where price structure would likely correct and meet. So I'm paying close attention to that 382 fib level because it should be a pretty decent level to trade. Even if you do a simple measured move of how long that correction took, that correction roughly took, let's apply the same trend line here. Just bear with me. So that puts us sometime in June, the correction should have played out. But notice the correction wasn't, it was a down move, big retrace, down move, big retrace. So just understand that it kind of almost stair-stepped its way down, shaking out a lot of the weak hands before it had a big move up. So if we see some sort of a consolidation just like this, where we see big move up, big accumulation, big distribution, big accumulation, big distribution, big accumulation into the bottom of this channel, we could be setting up for another big move up if we hit the bottom of this channel. So keep that channel on watch, because it is certainly something interesting that could play out. QQQ has a bearish divergence. Yep, definitely a bearish divergence. Definitely a bearish divergence. Here's your high on the RSI, daily RSI, high candle pivot, lower high, but a higher high in the price, another lower high, but a higher high in the price, another lower high, but a higher high in the price, and then another lower high, and then a higher high. So this market's on borrowed time. I mean, when you get 1, 2, 3, 4, 5 lower highs and 5 higher highs in price, that's definitely a clear bearish divergence. Definitely a big, big bearish divergence. You want to look at Bitcoin RAM? Let's take a look at Bitcoin. BTC USDT. Just give me 1 second. I'm just grabbing some water, guys. So Bitcoin, again, we traded this successfully in the live trading room on Friday. So that had a nice big dip intraday when it reached and it pierced that double top. You can see on the daily chart, we've pierced it once, pierced it again, and then a big sell-off. So what's interesting is this sell-off just happened, a couple hours ago, where we had a big dip down, big bounce, and now another big sell-off 10, 20 minutes ago. Huge bottoming tail taking us down to 67,000. So a lot of volatility in crypto ahead of this market session. Crypto is down right now in the futures market. Ethereum down 2, Bitcoin down about 1.8 in the futures, dollar down. Futures are slightly negative, but they have rallied off of the lows. So you are seeing a little bit of pressure coming into the Bitcoin chart. Again, I still remain a little bit more bearish on Bitcoin at this point in time. I'll go through the Bitcoin chart, Ethereum, and the total crypto market cap. So in the near term, I remain bearish on Bitcoin. I could see a retrace back down to about 50,000. And then I do think that we push up to about 86, 87. But you're into a double top, very, very extended, huge weekly RSI overbought signal. You could see a move like this, where Bitcoin goes through a corrective phase just like this here, where you see roughly a 30% decline. And then obviously Bitcoin managed to push higher. So if Bitcoin follows that same sort of price action, roughly a 27% decline from current price would take us down to the low end of this channel. And then I think you could actually push back up and make new all-time highs. Looking at the total crypto market cap, just give me 1 second, guys. Just gonna get some water. So looking at the total crypto market cap, you can see that the total crypto market cap's into this parallel channel, resistance, right here. And what's funny enough is we actually had this same sort of a resistance setup on the Bitcoin chart, and Bitcoin got absolutely rejected. Basically over here, you can see that it had that very similar setup where Bitcoin got rejected off of this resistance over here, had a big, big sell-off, roughly a sell-off of, what was that, 20% decline from that high pivot to the low pivot. So I think we're actually running into, and then obviously Bitcoin ended up smashing through that, but I think what we're about to see is also a very similar pullback in the entire crypto market space, where we're at that resistance and we should see a pullback and then a bigger push to the upside. Even if you look at Ethereum, ETH/USDT, another chart that is just trading into this resistance, but this parallel channel, pivot low to pivot low, pivot high to pivot high, and you're now trading into that zone as we speak. So I think a dip back down to the 7-week moving average is probably likely for a lot of these crypto-based stocks, but definitely an extraordinary moves in some of these names. Super, super moves in some of these names. Yeah, I think semis have been so strong because of Bitcoin, especially the likes of Nvidia. I think that Nvidia has been so strong, semis have been so strong because of Bitcoin and the halving, right? A lot of these companies and these Bitcoin mining operations, crypto mining operations, need the likes of Nvidia GPUs, semiconductors. So a lot of the times, like you even saw this mania in the 2021 Nvidia rally, where because Bitcoin mining was all the hype, people were trying to get their hands on mining rigs, and of course, who made these? Obviously, these semiconductor companies. So these GPUs are in full force hot demand because people are trying to get into the action now that crypto has been trading at new all-time highs and making huge parabolic moves. But very similar moves up in the likes of Nvidia and Bitcoin and the total crypto space. Very similar moves in how fast they've run. But I could definitely see a minimum retrace on Nvidia to back to this 382, 783 based off of this daily engulfing candle. Michael's putting in a 382 fib retrace for Bitcoin from November 2022 low to recent high gets a 49,250. Let's look at that. So from the November low, which is probably down, November 2022. Okay, I'm just going to go to the weekly chart then. So from this low, basically down here, to this high, he's saying a 382 fib retrace gets you to about that 49,250. Yeah, that's kind of what I have here. Our numbers are just off slightly, but again, we're dealing with such a big price range that my trend lines are probably just off a tad. But yeah, you're right around that 49,250 range. A 382 fib. And that kind of aligns with this channel, the top of that channel. That makes a lot of sense to retrace back down to that area. Even if we were to draw something like this, where you had that COVID low to your high pivot here, you can see that price action almost retraced to the 382 off of this little correction zone. And keep in mind, this is when Bitcoin was its most overbought. It was right at this high pivot is when your weekly RSI pretty much hit the levels around 95. And you had that 30% correction almost into the 382 fib. Same sort of a setup, very similar setup that we're occurring here where you're extreme overbought. That first initial pullback off the high RSI pivot is generally a very sharp decline, but it gets typically gobbled up very quickly over over a 2 to 4 week period. So watching that very closely. Good observation, Michael. Pfizer. We'll take a look at Pfizer. You're welcome, man. Thank you for your comments. So Pfizer, PFE, kind of a value trap. I've traded this a few times. We traded it off of this pop here, made a little bit of money, but I would have expected Pfizer to hold up a little bit better. First things first, although Pfizer looks so interesting here, it's so depressed. Believe it or not, the downside target I have on Pfizer is about 21.75. You can see this old little head and shoulders pattern that we triggered. Left shoulder, head, nice right shoulder technical breakdown. Downside move takes you to about 22, 21 bucks. Of course, again, this is a very depressed chart. One thing, if you look at the monthly on Pfizer, look at the support you're coming into. Your COVID lows. Look at that low pivot. You're right into that pivot right now. You are trying to finish this month, or at least formulate a monthly bottoming tail. So that does show some potential positivity, but just look at the sell side pressure in Pfizer. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months down in a row. Breaking this critical support trend line is not a healthy chart. So I think that Pfizer's potentially shaping up where we could actually see a move back up to this channel, back up to this trend line. And then I do think that a bigger move comes back down. I'm going to personally wait till this $22 level, this 783 fibs number here, 786 fib number, before I potentially look to go long. Again, you could bottom pick it here and try to play it for a bounce. It is certainly ending the week positive when the markets actually went through a distributive cycle, getting a nice little weekly reversal pattern here. But it's just such a harsh downtrend on Pfizer. The chart just isn't reacting. As oversold as it was and is on the daily, the weekly, the monthly, it should have received a bigger bounce than it has. And it just shows you that money on Wall Street is not liking this name. You know, it was a beloved stock during COVID, and now it's just been taken to the woodshed and almost like a value trap. Almost like a value trap. Take a look at CrowdStrike, CRWD. So CrowdStrike trying to become the backbone of the corporate America's enterprise security. So CRWD is the ticker. So CrowdStrike's a Wall Street darling. It's been a massive outperformer. Really also kind of following the coattails of NVIDIA. You know, you look at its January run from this 240 all the way to a high of 364, massive surge. Obviously, in this area, you have a huge amount of distribution and wacky candles forming. So whenever you start seeing this massive distribution formation occurring at these highs, it's saying, okay, price action needs some time to cool off. Doesn't mean it can't go higher, just needs some time to cool off. Still in a very strong uptrend. The bulls really want to hold this price above your previous all-time high pivot zone here. So I think that if you can actually consolidate for 4 to 8 weeks above this area, then price action could retest this high pivot and try to form another breakout. But bulls do not want to lose this 295, actually pretty much 297 area. That's where you want to stay above on a weekly chart basis. As of now, I think that this area could be bought, and then you just keep a tight stop loss on the trade. You know, you can even use this lower boundary pivot as more conservatively a buying entry. But anywhere between that 270, 290, and 298 looks somewhat enticing on a long trade. I think that you can leave this trade a little bit more room to run if you leave the lower boundary support at 273. That's your buyable level. As of now, the chart's not bad. I mean, if it corrects with the market, you should see it come lower. But it is starting to look, it is looking poised to potentially move higher if it stays above these two levels and consolidates and works out this pattern. No trade yet. I think the big move has happened. And now you're just kind of asking for trouble if you're going to buy in the center point of this range. Wait for a lower move to the low end of the range, and then do not try to buy the breakout of this high range yet. It's too soon, especially with a volume candle of that nature. It's much too soon. I'm actually just going to put on my volume indicator. For some reason it's off. So yeah, you can see the volume trade in that area. Do not try to chase this price action just yet. I think that if you wait for this 273 zone, you probably will get that buying opportunity in the next at least maybe 2 weeks or so. So hopefully that helps your analysis there. Yeah, I want it cheaper too. It's a great stock. Keep your eye on it, Michael. Keep your eye on it. You know, even if you were to draw a fib retrace, just want to see this correction cycle. I mean, you can see how these stocks have these massive moves, right? Even in this 2020 cycle, big move up, a little bit of a dip here, another all-time high push. And then it goes through these massive distribution phases, right? So even a name like this that doesn't have much history of trading, you know, this name, by the time it was done correcting in its 2022 correction cycle here, it almost hit that 786 fib So, I mean, whenever stocks hit a previous fib range, they could always retest that fib range again. So imagine it corrects to 786, you're looking to move to about 150. That would be a huge decline on Crowd, about a 50% cut in its valuation. So an interesting name, interesting name. Now, I'm not saying my base case is for a 50% correction. I think there's a lot of support levels in between. You know, I even think 382 is decent, 50 is really decent, 618 is decent, and this name will likely get a bounce before that. But that's just kind of what your mean trend is showing. Even if you draw on this channel, this is just something I just observed right now. Let's see how this channel interacts. Take a look at that, guys. So that was all just done right now. Take a look at that beautiful, beautiful channel on CrowdStrike. Pivot low to pivot high, pivot low to pivot high. Just funny how things work. So that's a beautiful, beautiful mean trend that's trading in. So again, you can still see based off of the trend, you're at the high end of the ranges. And we will have to wait and see if price action wants to correct. But definitely I prefer much buying at the low end of the range, which I think there's a shot that we could get. There's a shot that we could get. So I want it cheaper too. 50% fib halfway on the channel. Yeah, that would be it. You good eye. That would absolutely be it. You can actually see that if I turn on the center point of the channel, let me just go to the settings. The middle point of the channel I just turned on, this dotted line. Yeah, that 50% retrace would almost be it. Would almost be it. So we'll watch that one closely as well. MDB and DT. Okay, guys, we'll take a look at those other two. MDB, so MongoDB. Yikes. Just give me a second, guys, with this one. A little bit of a technical breakdown. Well, not a little, it's actually a big technical breakdown. So daily chart, you can see MDB gapping down, or actually not even gapping. Yeah, it would have gapped down, made a big push up to almost go positive, and then rejecting and reversing and closing back down to the low. So that's a super, that's what they call a gravestone doji candle, where you have a gap down, big attempt at pushing back to the positive side. You briefly go positive, and then you get rejected back down, closing near the dead low. So gravestone doji, hammer candle, bearish hammer candle, a couple different names for it, but I like the gravestone doji. That's likely signaling more downside. A huge break of this trend line. Your next support is going to be basically this gap fill, 328. But that type of reversal does look like it wants to probably retest. Wow, that's a tough chart. That's a tough one. That's not a healthy candle formation. So you will have some support there, but you likely will get through that zone. I'm just wanting to see something here, guys. Yeah, not a healthy chart. Let's throw in some moving averages. You know, whenever you're unsure of technical supports, use some of your moving averages. You can see you're coming up into the 50-week. But this one looks like it's probably going to go down all the way to the weekly 200. That's looking likely. You'll have the EMA 113 also as support. So the weekly 200 looks like it's going to be the stop for MongoDB, at least a big chart support. If we throw in a fib retrace from this high to this, from the low to the high, let's just see here. So you can see the 200 is right around that 50% retrace. So a couple factors just sitting there. But that is a big volume sell-off, you're right. And that's not a healthy trend. That's not a healthy candle formation. Big weekly breakdown. And notice how price action, what makes this chart worse is you were putting in this beautiful little cup and handle. You almost had this inverted head and shoulders pattern You know, this handle here, that price action was trying to break out of. And it broke out on the weekly chart and then got absolutely rejected. So this is a failed breakout, right? The fact that you got above this pivot zone, boom, with a breakout candle on volume, and then price action got rejected, that's what you call a failed breakout. This is a failed breakout in technical analysis. And typically from these failed breakouts, you get very, very big downside moves. Very big downside moves. So I'm definitely looking for more downside on this one. I think that you can ride puts all the way down to 324 pretty conservatively. You know, if the correction in the market gets a little bit nastier, you know, let's just see where the next fib zone is. So if you break that 50% retrace zone, you're looking at a 618 fib, which is all the way down at 270. There'll be a lot of support there. You can see that that's where you had your impulse green candle breakout. So maybe even price wants to retest there. Certainly with that high volume sell-off, you could see price wanting to reattack this volume breakout candle. Was that a daily gap up as well? I just want to see this. Let me just erase this shoulder. Yeah, so I think that price action could actually, based off of this high reversal, I think price action wants to go back to this gap, this volume gap. A lot of liquidity sitting there on that earnings gap up. I think market makers are going to push it back into that gap. So, I mean, even 300 puts on this name, again, not financial advice, but 300 puts, give yourself, I would say, I don't know what the option chain is looking like right now, but just from what I'm looking at, you know, we've had this move happen already. It's about a 25% correction. Probably get a bounce. Yeah, I would say, you know, 300 puts by mid-May, end of May maybe, it's probably a conservative trade. I think that should hit. 300 puts by mid-May, late May. I think that could hit. But again, just understand though, right now, you are coming up into that daily 200. Again, you are slightly oversold, but that's not a healthy chart. That's not a healthy chart. I think that what we watch for the proper way to trade this is what type of a pattern now do you get formed under here? Do you just have a straight flush down, or do you form a bear flag to take lower? If you form a bear flag or a bear wedge, then you could short this down. But it is looking like it wants to go lower. So unfortunately. All right, a couple other tickers. DT, PAN W. Let's look at DT. And then I am going to wrap the stream up since it's 10 o'clock. We've been going for quite a while here, so thank you all for tuning in. We're now approaching just over an hour and a half, so 90 minutes. So Dynatrace, I actually haven't looked at this chart in a while. First things first, it's coming up into a daily oversold condition. Weekly chart, you're already pulled back 1, 2, 3, 4, 5 weeks consecutively in a row. So this could be shaping up to be a little bit of a rotation trade where you're seeing semis and tech getting hit. This could be one that catches a little bit of an underlying bid just in the near term. First things first, you are coming up into this previous breakout trend line. Notice how you broke out of this trend line roughly here. You tested the breakout, failed, had a nice clear breakout, back test, almost a fake breakdown, and then a push for new highs. Looks like you want to retest this 45 area. You can see you're piercing the weekly 200 MA, but this chart is getting oversold. I think even at these levels, it makes sense to try to at least bottom pick it here. Daily RSI oversold, but again, conservative traders want to wait for at least a touch of this 45 area, this trend line. Let me just draw in this other trend line to see if we are coming up into this previous little breakout zone. So you can even see there, this previous breakout zone, pivot to pivot. This is where you broke out. Price is now just back tested. So this is a support level. Right in this area is a potential bounce trade opportunity for Dynatrace DT. Let's see the daily chart. Weekly, look at the volume in this area, massive volume. So that is quite telling us, this weekly chart is telling us that, you know what? A huge amount of shares have changed hands. This is trying to form a little bit of a low. people are swooping in and buying here. That's a heavy weekly candle, 28.1 million shares on this weekly candle. A lot of people bought in there. A lot of people. So you could probably get a little bit of a bounce in the near term in this name. Certainly not looking bad. No problem, Stonks 1969. We'll look at PanW as well for MW Moench. So PanW, PANW. And then I am going to close the stream up to an end, guys. But Palo Alto, obviously everyone's hyped on this name because Nancy Pelosi, what was she writing? Is it 200 calls? I couldn't remember. Something along those lines. But price action had that big bounce off the daily 200 moving average when the announcement came out that Pelosi was in. Huge bounce. Price action has basically been rejected ever since. Now you're coming back down. It does appear that you may want to lose this area. You might get a small intraday bounce off this daily 200 MA again, but I do not anticipate that this bounce takes you as high as it did. This is still a bear gap that it's opened. On the weekly chart, I have PanW now potentially forming a weekly bear flag. It's still a little bit premature, but this looks like it wants to retest the 618, which is around 226, maybe even this 213 previous pivot. That's where I have, the calculated level I have on PanW, somewhere between 226 and 213. It's about a $13 range that I will look to accumulate on the long side. So hopefully that helps. On that note, thank you all for tuning in. If there's anything else, please enter it now before I end the stream. But I just want to say thanks, MW Moench, thanks Stocks, thanks Ram, thanks Michael, thanks Arvid, thanks anybody else that tuned into the stream. If you missed this weekly sector review, definitely check out the initial stages of the video where I go through all of the S&P 500 sectors and their outperformance, underperformance, looking for capital rotation trends. We did mention a couple interesting tickers on this live stream thanks to some of the viewers. I do like that MongoDB for potentially more downside. That DT Dynatrace is looking like a little bit of a bounce trade. Bitcoin's looking a little bit toppy and running out of some momentum at these levels. So a lot of opportunities are coming forth into the market, and I think we're well positioned to take advantage of them. If you haven't checked out my tradingcapital.ca website, please, I will list it in the comments below. At the very minimum, please like this video, share it, do whatever you want with it, and we will see you in the trading room tomorrow. Take care, everybody. Thanks, Michael. Cheers. Thanks, Ram. Take care.